Good morning and welcome to Trade Setup right here on BloombergQuint Live. I'm Neeraj Shah, and it is probably not as bad, at least for today, as the street was fearing or factoring in, uh, maybe Friday evening or thereabouts. But let's take the summation of all that's happened, right? I mean, what happened in the asset markets for Friday, for example, or over the last 2 3 days. The yen, which was the safe haven asset, rose about zero point 0.6 against the dollar. The dollar itself did well, but the South African rand, which is the epicenter of the new variant, certainly corrected and slid to one-year lows. Equities in the U.S., which will resume trading after the Thanksgiving holiday, are set to open slightly higher. I mean, it was interesting when I made this. It was all seemingly going to open lower, but for now it seems that they might open higher. No, let's stick to that plate. That's okay. Uh, the US 10-year yield certainly came off, which is a great sign. European stocks had come off quite rapidly as well. In fact, and it looks pretty interesting as to what's happening around us completely. In fact, if you look at the news from the medical fraternity as well, biotech, which is the vaccine maker, expects the first data of the variant within 2 weeks. The initial findings, which will help to determine if the virus is a passing scare or is a bigger hit to global economic reopening around us. I think that is the key thing. So, from all that I read on various portals, global, including Bloomberg.com, it seems to be that it will take between 2 weeks to 8 weeks to determine, maybe 2 weeks to 8 weeks, it may be longer, who knows, but it will take between 2 weeks to 8 weeks to determine if this is not as big a danger as it currently seems, or could it be a really big deterrent to what all of us believe is a, a, a scenario wherein things will improve and lockdowns will reopen, etc., etc. As we, at least until last month ago, as we know, of course, a bunch of European nations have implemented the lockdown, some of which probably did it irrespective of the Omicron variant, right? So just keep that at the back of your mind. Now, I thought the Goldman Sachs note summed it up perfectly, and therefore I'm bringing the findings or the key excerpt of that one note, which Goldman Sachs had put out. They are saying that major portfolio changes are likely aren't necessary, assuming that the existing vaccines remain effective and that Omicron doesn't or isn't more malicious than the other strains. But short-term portfolio hedges may be appropriate given the time of the year and the liquidity as well as the policy risks in December. Keep in mind, the last line is extremely important, as much importance as they're giving to the new variant. The time of the year, which is, well, very close to December, wherein profit bookings happen in order to get the bonuses for the year from hedge fund managers and portfolio managers across the world. Liquidity scare certainly remains. One doesn't quite know if the taper is as big an event and as big a mover as people have feared for it to be, as well as policy risks in December for sure. So a bunch of things moving around. The only thing that I think, two things that I think everybody should keep in mind, is that in Friday, the 10-year yield certainly came off, and I'll get to that in a bit. First, if we are looking at from an Indian markets perspective, thus far, things don't look to be as bad. Yes, you will hear the headlines of 2 cases found in Bangalore, maybe somewhere else. But I thought it was important to look at the last 48 hours, the number of cases, the number of deaths, etc. And much as we see the the number of active cases in the US or the daily cases in the US and some other nations being so high, look at the Indian side, right? 8,318 new cases as of November 27th and 465 deaths. God bless their souls. And 8,774 new cases and 621 deaths. So the number of cases in India as yet hasn't moved up. Now you will argue, and I heard so many people tell me who I met that, oh, India will follow the West and the cases will rise. You wait and watch. My simple rule of thumb is, in God we trust, everybody else must show data. The data thus far isn't scary. Yes, if it starts showing a trend, you can build a hypothesis and then build a portfolio position accordingly, so on and so forth. I'm just saying, touch wood, from a health perspective as well as from a markets perspective, Indian cases don't look as scary as yet. hopefully we stay this way. And therefore, which is why the end part of my every trade setup is to everybody, please stay masked up. I was on a flight from Amritsar to Mumbai and people were not wearing a mask on the flight. It's just downright ridiculous. So please wear your masks so that these numbers stay this way. Now to the market. Sorry, a very long charade, but let's now get to the business end, and which is the markets. Asia is actually not opening as badly. If you just look at the scenario across the world, this is what the Asian screen looks like about 15 minutes ago, and not as bad. In fact, a couple of indices were on the verge of breaking into the green as well, so which is actually a great sign. And if you look at the SGX Nifty too, it'll probably show you a sign which is not terrible, which is actually a really good thing. I also want to urge you to look at what's happening to crude and Bitcoin. So everything came off, right? Everything came off on Friday. Crude was down some 10%, Bitcoin was down some 12%. Futures have rebound. Brent crude futures have shown a rebound. They're up about 5 odd percent, which is actually a great sign. Cryptocurrency, don't quite know. I mean, it could be anybody's guess as to whether it comes off rapidly or does it stay okay. But gold, interestingly, was very, very flat. So the safe haven thing is okay. Bitcoin too has actually bounced back a little bit, so which is actually not bad a sign. What's the trade setup like? There are two things. I think there's just two charts that I want all of us to look at, because I can tell you, viewers, for me or for anybody, it's nearly impossible to predict how the cookie will crumble. But this is the first one, which shows how India is still at a massive premium to, well, say countries like China, and with reason, of course. But the point is, the future outperformance may hinge upon whether portfolio managers at large believe that in these uncertain times, do they want to stick with an expensive market like India, or do they want to take the route of sticking with safer markets, which are on the valuation front safer, like China. And these premiums that in MSCI India has, that the 12-month forward price to earnings ratio is 2 standard deviations above averages, and which is why I think that is one concern for India, that the valuations are high for India. Even now, after the correction, we've corrected about what, 1,500 odd points from the top, still valued high. And I think one chart from Dr. C.K. Narayan's weekend columns that he writes for us, I thought the volatility chart was interesting. And I'll tell you why it's interesting. If we just bring that chart up, this was probably the third instance of India VIX shooting up big time in a single day. There have been 2 other instances that have happened in the last 12 odd months, wherein VIX has shot up significantly at one particular session, only for the subsequent week to see VIX cool off. And which is why, I mean, per se, we haven't had a really large corrective move except for the Feb to April period. But this move was very large, and therefore this current week becomes very, very important. If volatility stays within control, then you might well have a shot at, who knows, the correction not being as severe as people make it out to be. But let's wait and watch. I wish the chart would have come up. Nevertheless, I think we are having some issue with the chart, but that's okay. I think we'll still figure that out. The other bit is FI selling. One last piece out here, FI selling, which is incessantly higher. So in Friday's session as well, I think 5,785 crores FI sold out. DI is got about 2,294 crores. So they are trying to do their bit, but the FI selling is very, very severe. And I think that remains a problem for Indian markets. Like I said, I think if foreigners, there are 5 or 6 houses which have downgraded in India. If foreigners believe that India is an expensive market, you might not have that cushion of buying coming in very soon. So please be mindful for that. Don't get carried away with this small stability that we're seeing in the morning. It could be deceptive. So keep that in mind. Not too many stocks as well to focus on. I really don't want to focus on too many stocks because you don't quite know, as I said, how the cookie crumbles. By the way, keep in mind this piece, and this script may not necessarily follow, but if it follows, it might well pay to look at what had happened in 2020 when the first virus issues came up about, when the Nifty had corrected on a weekly closing basis level from the 14 Feb close to April closes, about 33%. But in FMCG had done really well. Autos had really gotten blasted out, 42% correction. Banks had corrected a bit too. Pharma and IT relatively better performers, but defensives really rule the roost then as well. What about stocks to watch? I think 2 or 3 things that I would urge everybody to watch. Of course, the biggie is Reliance Industries. Now, the news is, of course, that they're going to increase tariffs and shouldn't come as a surprise to anybody. So keep that at the back of your mind. But yep, multiple price points here. I just have an assessment from a sales note, which I'll read it out to you viewers in case it helps you. In 2019, when the hikes had happened, somebody's done an assessment of how it flew down to EBITDA. So during the previous tariff hike in December 2019, Jio's EBITDA increase was gradual over 4 to 5 quarters, unlike peers, which had come up wherein they had got benefit over 2 quarters, which as the company highlighted that it had a high share of long validity customers. Airtel had seen an 80% of the expected ARPU increase translated into EBITDA. Annualized increase in EBITDA was 4,400 crores in the India mobile business. Airtel was huge. They had benefited tremendously. We had gotten a gain of about 25%, but the expected increase was much higher because of the continuous market share loss. So clearly shows that during the previous regime of price hikes, Airtel was the biggest beneficiary. No reason why it can't be the same this time around. So Airtel has done some tinkering before I went for my break. So that's around 2 weeks ago. Jio, the big boy, has done the tinkering too. You expect telecom now to probably continue staying that outperformer. Remember, in this current fall that we've seen, Reliance has been the biggest contributor percentage-wise to a fall. Airtel has been the biggest gainer. You might well want to explore the fact that while Airtel stays constant, does Reliance manage to eke back some of that underperformance? Difficult question to answer, but watch out for that. I think I'll watch out for Ashok Leyland as well. One last talk, really, wherein the MD and CEO Vipin Sondhi has resigned effective from December 31st, and Dheeraj Hinduja will take over as executive chairman with immediate effect. Let's see if there's some issue for the stock of Ashok Leyland in today's session. I'll also watch out for some stocks which had run up on the back of expectations of some announcements over the weekend, which haven't come about. Indiabulls Housing Finance, for example, which was up a healthy 10% in Friday's session. And could that see a corrective move? A little bit, if you will, maybe not. And very, very difficult to trade Indiabulls Housing Finance. I'll watch out for real estate stocks as well. If there is a bounce back, you would well expect from everybody that I hear that the strongest bounce will be in real estate. So please be careful if you're trading some of the realty stocks. They might be tricky to short, keeping in mind the volatility. So monitor the volatility. That would be the biggest assessment of where the market moves. Watch out for the dollar index strength or relative weakness, if you will. The yields are not a problem as of now because they had a big drop. It'll be interesting to monitor that piece too. So too many things to monitor. The safest thing to do is not really trade very aggressively at the current times. Wait for the trend to stabilize before you try and make any big moves. Thanks so much for tuning in today. Have a safe, profitable day ahead. And if you're stepping out, please stay masked up.